Did you know you could have turned $100 into $1,000 with this simple investment strategy? Now that's the power of investing. It's not some mystical art or exclusive club, it's a tool that can help you build wealth over time. You might be asking, isn't saving enough? Well, imagine two friends. One saves, tucking away money under his mattress. The other invests, putting his money to work in the market. Over time, the saver's pile of cash stays the same, while the investor's money grows thanks to the magic of compound interest. That's money making more money. Investing is like planting a seed. Given time and the right conditions, that seed can grow into a mighty tree. But if you just keep that seed in a jar, it won't grow an inch. So, are you still keeping all your savings in a bank with minimal interest? But before you jump into the investing world, it's crucial to understand some basics. Imagine the stock market as a bustling farmer's market. Each stall represents a company, and the fruits they're selling are shares of their company. When you buy an apple or a share, you're investing your money in that company. If the company does well, your apple becomes shinier, more valuable. This is what we call stocks. Now, let's move on to bonds. Picture lending money to your friend to start a lemonade stand. In return, your friend promises to pay you back with a little extra after a certain period. That extra is the interest, and this is essentially how bonds work. You're lending your money to a company or the government, and in return, they promise to pay you back with interest. So, what about ETFs and mutual funds? Well, imagine a fruit basket filled with a variety of fruits. This basket represents a collection of different investments like stocks and bonds bundled together. ETFs, or exchange-traded funds, and mutual funds allow you to buy this basket, giving you a taste of a wide array of investments in one go. Now, how does this bustling farmer's market or the stock market work? Well, it's all about supply and demand. If a lot of people want to buy apples from a particular stall, the price of those apples goes up. If no one wants them, the price goes down. It's a constant tug of war between buyers and sellers, and the prices fluctuate throughout the day. Investing is more than just buying low and selling high. It's about understanding the market, knowing the value of what you're buying, and being patient. It's not a get-rich-quick scheme, but a way to build wealth over time. There's a lot more to explore in the world of investing, like cryptocurrency, ESG investing, and more. But understanding these basics gives you the foundation you need to start making informed decisions. Now, with these basics, you're ready to embark on your investing journey. In 2024, there are several exciting trends that beginner investors should be aware of. Let's start with the big one: cryptocurrency. This digital currency, completely decentralized and operating independently from a central bank, has been making waves for a few years now. Bitcoin, Ethereum, Dogecoin, you've probably heard of these. They've become mainstream and are now a part of many savvy investors' portfolios. But what's the deal? Well, some see it as the currency of the future, others see it as a speculative bubble. But one thing's for sure, it's a trend that's hard to ignore. Cryptocurrency can offer high rewards, but remember, with high reward comes high risk. So if you're thinking of dipping your toes into the crypto pool, make sure you do your homework first. Next up, environmental, social, and governance investing, or ESG investing for short. This is a type of sustainable investing that considers the environmental, social, and governance factors of a company in addition to its financial performance. Think of it as investing with a conscience. More and more investors are looking at how their money can do good in the world while still giving them a decent return. Companies that prioritize sustainable practices, ethical conduct, and social responsibility are getting a lot of attention. And it's not just a trend, it's a movement. As the world becomes more conscious of our impact on the environment and society, ESG investing is likely to continue to grow. But as with all things in the world of investing, it's essential to do your due diligence. Research, analyze, and understand what you're investing in. Don't just jump on the bandwagon because it's the hot topic of the moment. Understand the risks, the potential rewards, and make sure it aligns with your investment goals. Being aware of these trends can help you make informed investment decisions. So whether you're considering dabbling in cryptocurrency or thinking about ESG investing, remember, knowledge is power. Happy investing. Investing isn't without risks, but don't let that scare you away. In the thrilling world of investments, risk is like that unexpected plot twist in your favorite movie. You know it's coming, but you're never quite sure when or how. But fear not, because just like the hero of your movie, you can manage this risk. Let's think of risk as a wild stallion. Untamed, it can throw you off at any moment, but with the right techniques, you can ride it to your advantage. The first technique is understanding that not all investments carry the same level of risk. Some, like government bonds, are like gentle ponies, while others, like cryptocurrency, can be more like those wild stallions. Now imagine you're at a horse race. Would you bet all your money on a single horse? Probably not. You'd spread your bets across several horses, right? This is the essence of diversification, spreading your investments across different asset classes, sectors, and geographical regions. Think of it as creating a delicious salad. You wouldn't just fill your bowl with lettuce, you'd add tomatoes, cucumbers, perhaps some cheese and croutons. Each ingredient adds a different flavor, texture, and nutritional value. Similarly, each type of investment in your portfolio brings a unique return potential and risk level, creating a balanced, diversified portfolio. Diversification doesn't guarantee that you won't lose money, but it can help cushion the blow if one of your investments takes a downturn. It's like having airbags in your car. You hope you'll never need them, but you're grateful they're there when you do. In the end, managing risk and diversifying your portfolio is about balance. It's about knowing when to take on more risk for the potential of higher returns and when to play it safe. It's about understanding that while investing can be a roller coaster ride, you're in the driver's seat. Remember, don't put all your eggs in one basket. After all, a diversified portfolio is not just about having more, it's about having more balance, more stability, and more opportunities. As a beginner, there are some common pitfalls you should avoid. One of the most common missteps is investing without a plan. It's like setting sail in rough seas without a compass. You wouldn't do that, would you? So why plunge into the world of investing without a clear strategy? Secondly, don't be a lemming. Following the crowd can lead you off an investment cliff. Remember, trends come and go, but your financial goals are unique to you. So make sure you're investing based on your own research and understanding, not because everyone else is doing it. Lastly, putting all your eggs in one basket is a surefire path to disaster. Diversification is your safety net, your buffer against the unpredictable ebbs and flows of the market. So, spread your investments across different asset classes to reduce risk and increase potential returns. Avoid these common mistakes and you're on your way to becoming a successful investor. Ready to start your investing journey? Great. Let's walk through your first steps. First, set clear financial goals. Are you saving for a house, retirement, a trip to Mars? Knowing your why will guide your how. Next, do your homework. Research potential investments, understand the risks, and decide what fits your risk tolerance and time frame. Investing isn't a set-it-and-forget-it game. Regularly review your portfolio. Monitor your investment's performance, but don't panic at every market fluctuation. Remember, investing is a long-term game. Consider seeking advice from a financial advisor. They can provide valuable insights, especially when you're starting out. But always remember, it's your money. Make sure any decisions align with your goals and comfort level. Investing can seem daunting, but with a little bit of knowledge and a dash of courage, you can make your money work for you. With these steps, you're well on your way to making your money work for you. So, what are you waiting for?